Okay, guys. Thank you all for joining us today. Sorry, we're just a little bit delayed here. We're having a fascinating discussion and then popped on here.
Yeah.
So, guys, I'm Brandon McGee again here at the McGee Law Firm, estate planning in South Lake and Fort Worth, Texas, and Tarrant County. I'm here with Michael Velasco. Thank you, Michael, for being here today.
Awesome to be here.
And
One of my
Michael,
favorite attorneys in DFW.
thank you. We appreciate that. And just so you guys know, my wife and I have personally used Michael's services before, and we're extremely happy with the service we got. So I can give him a personal endorsement. But Michael, you're the founder of Qualified Intermediary or Exchangeable LLC. Is that correct?
Yeah, Exchangeable is the company I started. I'm the sole owner. I've got a great staff, but I we do 1031 exchanges all around the country. We're qualified intermediaries. I'm also a CES, which is kind of like a CPA in the QI world, and so all my designations, everything's. Yeah, I founded it. A little bit of background in both real estate and in tax. I own an accounting firm
Oh,
for
awesome.
for a number of years.
Okay.
So had some CPAs on staff. So I kind of have the tax background, the
Okay.
real estate background, and so and all that's all I do exclusively now
Well,
here.
let's do with the 1031 exchange. That's what you're doing now.
Yep.
Let's do a 101 for dummies. Okay.
Yes.
Let's pretend that none of us who are watching this, because some people will not know much about it at all.
Yep.
Let's just start with the very basics. What is the purpose of a 1031 exchange?
A 1031 exchange is basically a tax deferral on the sale of real estate, so of real property. So if you've got an investment property, so the four things that they should know, the four basic things. Number one, it must be an investment property. In order
Okay.
to do a 1031 exchange, it has to be an investment property. It can't be a primary residence or a second home used for personal use.
Okay.
And there's some nuances to that. We'll get into a little bit later, but equal or greater value. So when you sell a piece of real property, you have to buy equal or greater value when you do a 1031 exchange.
Okay.
And then there's the other one that's the trickiest. One of the trickiest is the same taxpayer rule. So if you are the seller of the property, you can't go in 1031 exchange with your brother or a partner, et cetera. So it's got to be the same taxpayer rule. And same taxpayer can be a lot of things. It can be a partnership, LLC
Mm.
partnership. It could be an S corporation. It could be a C corporation, or it can be you individually as a taxpayer. So if you really know those four things, you know more than about 90% of people when they're doing a 1031 exchange. And it's a deferral. You sell a piece of real property, you buy a piece of real property, you reposition your assets, and that's what the 1031 code is for.
And so, what is, and I actually know the answer, but
Yeah.
I want to hear you explain it because
Yeah.
you can probably explain it better. But what exactly is the purpose? Why, if I'm going to sell my investment property and buy another property, why would I run it through the 1031 exchange? Why wouldn't I just get the money and go buy a new property? Why do I
Yeah.
call you?
Yeah, exactly. So, and one of the other rules is you got to use a qualified intermediary to do a 1031 exchange. So a lot of people will think they can do a 1031 exchange without a QI.
Mm.
QI's role is to help with the documentation, prepare the final report, administer the funds, which is one of the most important
What is a
things.
QI?
QI is a qualified intermediary.
Got it. Okay.
So that is what we do in the middle of this transaction. We basically take the funds from the sale of the relinquished property,
Yeah.
hold those funds, and then distribute them to the replacement property. So you have to use a qualified intermediary when you do
Okay.
a 1031
But again,
exchange.
so for dummies,
Yes.
why do we want to do that? What is the advantage of
Yes.
the money going to you and your business instead of hitting my bank account? Then I go buy the new property. What's the advantage of that?
Well, the advantage of a 1031 exchange is you're deferring the taxes. So on the sale of real property, you're going to have, if you've held it for longer than 12 months, you're going to have long-term capital gains.
Yes.
Any depreciation on an improved property, and when I say improved property, I mean a building on the property, we're going to depreciate that asset, either a normal depreciation schedule or a cost segregation report. We're going to take some massive depreciation. So those are the two taxes that we're deferring is the long-term capital gains. And in some states, they have long-term capital gains for state
Okay.
income as well.
Right.
Like California has
Yeah.
ordinary income on there.
Right.
So does New York. So you got to watch out what state you're in.
Yeah.
But you're going to defer those and you're going to take, instead of giving the government their piece,
Mhm.
you're going to keep your liquidity and roll it into a new
Okay.
property. And you're going to reposition the asset.
And so, and correct me if I'm wrong, but the key is because if for example, when Rita and I, my wife and I, use your services, we sold an investment property and rolled it into another one. And because the money stayed in your account and did not ever hit my account,
Yes.
that's why I did not have to pay capital gains
Yeah,
tax.
yeah, and that's called constructive receipt. So you can't, as a taxpayer, have constructive receipt of those funds or the exchange is blown.
Correct.
And so that's where the QI, the qualified intermediary, comes in. And so
Okay.
we administer those funds, and then at your direction, send them to the title company and
So
the closing
it
property.
essentially, the reason for working with a firm like yours, a company like yours, is to avoid having to pay capital gains tax. Is that correct?
Basically, yeah. I
Okay.
mean, on the highest level, that's it. We don't want to
Okay.
pay, we don't want to give the government, especially if we're buying another property.
Yeah.
Like, why would we pay
Right.
taxes if we don't have
Yeah.
to? Reposition it.
Okay. And obviously, at some point, if somebody just says, "Hey, I'm checking out of the real estate game," and they sell, you're then going to have to pay the capital gains, right? But
Totally.
if you're buying new real estate, we can keep kicking the can down the road.
We can't.
And then if you guys, just so you know, and Michael can correct me if I'm wrong, but if you do have investment properties and you plan on keeping those and not divesting of those, we can actually completely avoid the capital gains tax when you pass away if you set up your estate in the right manner to pass for those properties to pass to your family. Then the capital gains is wiped out at the time of your death when it passes on. So
Yeah,
we can actually, if you're going to
yeah.
hold these assets until you pass away, we can completely avoid capital gains, right?
Yeah, we call it in our space, we say drop, swap until you drop. And that's just because you get a step up basis. And I think it's
Yeah,
what the big, beautiful bill is, what, 30 million now, 15
right.
million per. So it's a pretty big number that you're eventually going to get, your heirs are going to get a step up basis upon the day of death. So it's a lot of folks will exchange all the way until they pass away.
Okay, and let's talk about this characterization of investment property. So if I own a house at the beach, say a condo at the beach,
Yes.
and I don't Airbnb it, I don't VRBO it, it's just for my use.
Yeah.
That means it's not an investment property.
Yeah, it would be tough to qualify. The case law is not in your favor as a taxpayer.
Okay.
So you really want inside the revenue procedure 2008-16, it basically outlines in 2008 the IRS gave guidance on it.
All
It
right.
basically said if it's for personal use and you want to really consider doing an exchange, you have to use it for no more than 10% of the total days Airbnb. So
Okay.
if you rented it 300 days a year, you could use it for 10%, 30 days of personal use, not including, and here's where it gets a little interesting, not including the days you're working on the property.
Okay.
So those would not be considered personal use. So if you're either painting it, fixing it up, doing all kinds of things to it, that would not be considered personal use. So that's a safe harbor guidance that the IRS gave us. I think it's tough, just opinion. I think it's tough for the IRS if you're renting it out for a substantial amount of time.
Mm,
I think it's hard for the IRS to say that it was an investment property.
okay.
Now, on the opposite end, if you're not renting it out, it's problematic. And
What
if you're not receiving rental income and treating it as a true investment and try to exchange it, I think you're dead in the
okay,
water.
what if I own rural farmland and I either I have a farmer who pays me to be able to farm the fields to plant the crops and farm the fields, or I lease it out to hunters. So I do earn income off of it.
Yes.
Can we run that through the
Yeah,
1031?
we can. So
Okay.
for business use as well, which is important. So if you got I'll give you an example where this is a good example. You got a family farm that occupies, has a single family home on it that's got a 10,000 square foot lot in the primary
Yeah.
residence. The rest of it's farmland. The other 100 acres is farmland. That's held for investment or business use.
Okay.
And so when we have exchanges like that, we extract the value of the primary residence. They're called mixed use exchanges, and then we exchange the rest of the farmland.
Okay.
Likewise, if you had a fourplex and you lived in one of them,
Yeah.
three of them would be an investment. But to your direct question, yes, it's held for investment. You can 1031 exchange that property.
Okay.
Yeah, if it was hunting or farming or.
And by the way, you may know this, but this is the building that we use your services to purchase, by the way. This one
yeah.
right here. So
I was gonna say the address sounds very familiar.
yeah. So for this building, for example, so guys, what my wife and I did last year, we sold a rental home that we had and used Michael services and then rolled that money into the purchase of my new South Lake building and avoided all sorts of taxes, fortunately. But so for example, I use one half of this building and then we have a tenant next door.
Yeah.
So if in the future, hopefully way off in the future, if I sell this building one day, what does that look like?
Because it's business use here, right? It's a law firm with law offices, and then
Yeah.
next door we've got another rental, so it's all held for business. So Brandon could basically take and 1031 exchange the entire property at
Okay.
that point. Yeah,
Same thing. Would it be for like warehouse and industrial space?
same thing.
Same thing.
Yeah,
Okay.
depending on your asset class or what business you're in. If you're thinking about, and a lot of our net worth is coming as small business owners is coming from the assets that we have,
Yeah.
the real estate assets. You could certainly 1031 exchange those. And here's another important subtle thing as well, is you could eventually take this building, which will be worth a lot of money, and go, hey, I want to buy a couple of replacement, investment condos or smaller residential properties. So you can break them up and go into multiple assets, or likewise, you could take 10 assets, sell 10 homes, and go to one very large
Okay.
commercial property, which I'm doing a lot of. It seems like I'm doing a lot of right now, is transitioning residential portfolios
Mm,
into single triple net commercial buildings, which seems to take a lot of the headaches away from my single family homeowners.
okay.
As they build the portfolio, eventually they get older and they just don't want to deal with all
Correct.
the doors, so they go to a triple net commercial. So we do a
Okay.
lot of that.
And look, I know there's some deadlines with
Yeah,
the 1031, 45 days. Is it 45? Okay, 45 days to identify the property and 180 days to close on the property.
yep,
Number one, 45 days and 180 days from when? From the date that you sell your first property?
yeah, and
Okay.
the date you actually close on the relinquished
The
property.
closing date.
So
Okay.
you keep in mind you've got the escrow period as well, which can be 30 to 60 days, depending on the
Okay.
asset class, right? So we've got that whole 30-day escrow period. 45-day clock does not start. So we've got that whole period. Then day one is when we close the relinquished property. Then we have 45 days from that close date to select or identify a property. And identification is, in its loosest terms, just means we give like Brandon, I'll send Brandon a form, he'll sign off, these are the properties I want to buy or identify. You can identify up to 3 properties in a regular forward exchange. There's a couple of other rules which I don't want to muddy the water here, but typically it's 3 properties you can identify, and then you have to close within 180 days, which is usually not the issue unless you have a big commercial property.
And so
180 days is
how
plenty of
strict
time.
are those guidelines?
As strict as they come.
Okay.
As
So if you
strict as they
blow
come.
it by a day, you're going to
You're
have to
done.
pay
You're
capital
you're
gains.
done. Yeah, and
Okay.
if you have a QI that there's G6 regulations within the code that regulate a QI activity, qualified intermediate activity. And if I get loose on that one rule, just kind of, they call it an accommodating accommodator. They can go back and invalidate every 1031 exchange I've ever done.
Okay.
So that rule is with the QIs is hard and fast as they come. Midnight, 45th day, you got to identify.
Okay, so guys, just in case you didn't catch this, basically, if you're going to use a 1031 exchange to avoid capital gains tax, you can't take a laid back approach. You can't say, well, let me go ahead and sell this. Michael's got the money for now. And here in 6 months or a year, I'll get around to figuring out what I'm going to buy next.
Yeah.
You have to hop on this quick, and you have to have a quick game plan to be able to do this. Or else it just won't work. Okay, what are common mistakes that you see investors and the real estate agents making during a 1031 exchange process?
During a 1031 exchange is my clients that have a very low anxiety level seem to wait to the last minute to pick properties.
Okay.
They don't seem to really be on the ball. I think if you're there's some strategy. It's a game of chess kind of that you're playing when you're selling a 1031 property. So you want to give yourself maybe a little bit of window on the closing of the relinquished property because it doesn't start the 45-day clock.
Okay.
That's the big one. The second thing that folks mess up all the time is they don't think they have to buy equal or greater value, even though sometimes you tell them, you put it in writing, they sell for $1 million and then they go put another property
for 800,000.
Yeah, for 800,000. And I'm like, well, are we buying another one? What are we doing with and they're like, oh, I thought I just had to reinvest the equity.
Yeah.
Like they walked away with 800,000 and maybe they had a $200,000 loan on the relinquished property and they don't buy equal or greater value.
So the equal or greater value is not your equitable value, it's the actual value of the
Actual
property.
value.
Interesting.
Minus some allowables. Those should be commissions and a couple title fees.
And you also could, but you could buy two or three smaller properties.
Yes.
Okay.
Yeah, you could.
Okay.
So those are probably the two. And then every now and then you got to watch it with family members because
Mhm.
people will just sell it to their sell or buy something from their family members. And there's some restrictions on,
Okay.
buying from a direct descendant, somebody that's close to your family, a brother, sister, mom, dad. You go and buy a property from them, that could be problematic in a 1031 exchange. There's lots of little nuances when you deal with family, but those are probably the three that I see most. And then there is a little bit of weird stuff with the loan where we'll get somebody that same situation. They have 800,000 in equity, and they go get a loan for more and want to keep some of the money. And
Okay.
so that's also sort of constructive receipt. So all the funds that came from that relinquished property that went to the QI have got to go as a down payment on the new property.
Okay.
So receiving any type of cash is called boot. It's taxable. Boot is a strategy. If you need liquidity, you want some money in your pocket, you could take some boot and not pay all the taxes.
Okay.
That I see a little bit as well
And
out
to be
there.
clear, this works in all 50 states, right?
All 50 states, yeah. And
Okay. And you have clients all over the country.
all over the country
Okay.
from Maine, which from Maine to Hawaii, we're doing
Okay.
exchanges right now. Some states regulate a little bit more heavily. Like Idaho, you need an actual escrow license. Maine, you need an escrow license. Nevada's got some weird little rules.
Okay.
Some of the we have all of the in
But
every
you
state in the
can,
country.
I could sell a property in Texas and buy in Florida,
For
right?
sure.
Okay.
Yeah, for sure.
What about, and I'm just kind of going out on a limb here, but what about if I want to buy uh, a villa in Tuscany in Italy?
It's
Can you
interesting.
move this money to a foreign land purchase, or is it just domestic?
Great question.
Okay.
So for a US 1031 exchange, it has to be US for US, and that
Okay.
includes the Virgin Islands and Guam, including
The
all
possess
50
like Puerto
states.
Rico.
Not Puerto
Oh,
Rico,
not Puerto
not which
Rico.
is really surprising.
That's weird.
Yeah, it is
Yeah.
weird. Virgin Islands, Guam, and all of the United
The
States.
possessions.
Yes.
Yeah.
Now, there is something called the foreign exchange where you could, if you were taking some weird depreciation, you were living here and filing a US tax return and selling your place in the UK and doing an exchange to another European, there is a like for like foreign to foreign exchange that you can do. We're doing one
Got it.
right now, actually,
Okay.
out of London,
Okay.
out of the
So
UK.
so the takeaway would be yeah, if you are going to be dealing with foreign real estate, there is potentially something there for you
Yes,
to take advantage of as
if
well.
you have a U.S. tax consequence, you'd want to do a 1031 exchange.
Got it.
If there was some sort of weird
Okay.
depreciation tax consequence, but that would be a rare thing if you were living here, filing tax return and selling and buying in a foreign country.
Yeah.
There could be some
But I
exceptions.
will say, here in DFW, I have quite a few clients who are originally from other countries.
Yes.
It could be India, it could be the UK, it could be Canada, everywhere. And so sometimes that does go on,
Sometimes it makes sense depending on the U.S. treaty,
right.
not to get into international tax law, but we'd have to sit down with the international tax specialist CPA and go, hey, does this make sense or not? And
Right.
yeah, and we usually have that
So
conversation
kind of
before
an
we go.
extra layer of analysis when we're dealing with international
Yeah,
property.
for sure. And it's rare that we would do a lot of that, just simply because there may not be a tax consequence on a foreign, unless
Okay.
there was a depreciation issue that was taken. So
Okay. And right now, what kind of trends are you seeing with investors using 1031 exchanges? What are you seeing out there in America right now?
here's what I'm seeing. 40% to 50% of all exchanges are coming out of the state of California.
Okay.
So lots of California, Texas exchanges, as you can
Okay.
imagine, California to other states.
So
Um,
lots of people moving out of California.
Out of
Okay.
California. Yeah, for a variety of different reasons, New
Yeah.
York as well. So the other phenomenon I'm seeing, even though the market's been kind of slow the last couple of years, commercial's still really busy, and I'm seeing a lot of single family portfolio packages, selling packages and going to a single asset or what they
Okay.
call a DST, which is kind of a share of a larger commercial building. The other thing that I'm seeing is a lot of reverse exchanges right now,
Okay.
and those, just to kind of give a high level view for our audience, is you can buy the replacement property first. There is procedure for that, and you go, well, wait a second, how can I buy a reverse property before I sell the relinquished property.
Mhm.
And that is through what they call a title holder. So basically on a reverse exchange, if you have the liquidity to buy the replacement property first, we set up an LLC. So like in Texas, we would set up an LLC in Texas, single member would be exchangeable. So
Okay.
we're going to hold title to that. We're going to
Right.
be the title holder temporarily. And the taxpayer is going to bring the liquidity. We're going to close on the property in this LLC title holder. They're called
Okay.
LLCs, exchange accommodator title holders. We hold that property for up to 180 days till we sell the relinquished property.
Okay.
Once the relinquished property is sold, I reimburse the client for the money that they brought to buy the replacement property, and I do an entity transfer with the LLC. So I just
Okay.
say the LLC stays on title. I just change the member
Got it.
from exchangeable to the taxpayer.
How about this? Here's
And so
another,
it's a good tool. So I see those a lot right now.
let me throw out another oddball question. So, one thing that's become kind of popular here in Texas, probably other parts of the country, are real estate funds where you have a company and they own a bunch of apartment complexes
Yes,
and you're investing in the fund. So you're an
yes,
investor, but that company actually owns the real estate.
yes.
Could you use a 1031 and go from selling your rent home to investing in a real estate fund in which you're not the actual owner of the property?
Great question. So they do have those funds set up for 1031 exchanges. They're called DSTs,
Okay, cool.
Delaware Statutory Trust. It's basically a fancy term for you own a percentage of a property,
Yeah.
and you can 1031 into those and 1031 out of those into
Okay.
larger commercial deals. There's also something called TIC syndicates, which is tenants in common ownership. So what we do is, let's say Brandon with this building, he said, "Hey, I want to sell 2/3 of this. I'm going to keep a third, and I'm going to sell in tenants in common. I'm going to sell two other thirds to
Okay.
different investors." In those cases, you can do that in a TIC. Now, there's some restrictions on tenants in common TIC syndicates, and one of them is you can't have more than 35 members.
Okay.
So if the asset gets really large,
Yeah.
TICs no longer make sense
Yeah.
for it, and then the DSTs can come in. And here's another interesting one. You guys will love this in Texas. Is that you can 1031 exchange into and out of oil royalties as well.
Oh,
There's a
really?
company. There's a big company
That's
here in
so
Texas.
cool.
You say, "Hey, I don't want to mess with the single family stuff anymore. Just give me the oil,
Okay.
royalties, either to the land or the royalties themselves." So
Okay.
interesting things you can do that you probably have never
So
thought
the
of.
exchanges can work for mineral rights.
They can. Yeah, it's
Awesome.
considered real property, depending on the state, but most states they consider that real property.
Okay, let me ask you this. So number one, let's pause. How can people contact you? Like maybe give out your web address, but
Yeah.
how can people find you on the internet?
Yeah, 1031exchangeable.com.
Okay.
That goes straight to my website. You can book a Calendly link. So it's 1031exchangeable.com. Right on the website, you can book a Calendly link right with me. There's Zoom or a phone call. You can reach out to me. Just even if you have some general questions. I've got an amazing staff, but I still do. I'm kind of like Brandon. I take a very hands-on approach to client base. And so depending on what your situation is, and it seems like everybody's got a situation, right?
Yeah, that's right.
Like
Right, right.
something kind of
Everybody has a unique twist.
Yeah. So we kind of explore all of those things. And here's the other thing I want to say is know your entities. When Brandon's helping you set up these trusts and these entities, know what type of entity you have. And so I get a lot of clients that are like, "Well, it's in an LLC," and I'm like, "Well, the LLC, is it filed on your personal tax return? Is it a 1065?
Right.
Is it 1120S S corp? Or I don't know.
Let me call the CPA.
Let me call the CPA. So it's something you should, if you have an LLC, you should know what type it is. Is it disregarded for tax purposes on your 1040? Is it an S corp filing 1120S? Or is it some partnership or something like that? That's one thing you should know as a taxpayer and as an investor. You should know your LLC.
And let me ask this too. So, like me, you're not, you as much as you might want to work for free and do this as a service, you obviously need to make a living, right? Like I do. So, explain, like if somebody's going to use your services, how much are you compensated? How does that happen?
Yeah.
What does that look like in terms of you being compensated for the job that you do?
Yeah. And think of QI fees as just like commissions, meaning we don't get paid until the close. We actually close the deal. So it'll be line item on a settlement.
So the title company pays you?
Yeah, they typically cut a check from proceeds of the relinquished property.
Yeah.
Our base fee is $11.95. That includes both the relinquished and the replacement property.
Okay.
Things get more expensive if we do exotic exchanges like a reverse exchange or an improvement exchange. we're having to set up this title holder we were talking about earlier, this LLC. Things get a little bit more expensive. Those start out at usually about $8,500.
Okay.
And then in between that, like just depending on the complexity of the exchange, we'll bid it out. But generally speaking, those are the fees. 11.95.
That's for something pretty basic, not
Basic.
complicated.
Yeah.
And then that comes out of the sale of the property.
Yep.
And then just so at no point, am I cutting you a check? It's just the title company's giving you the money at the end of the
Yeah, just like your real estate agent would, they would receive a commission, it'll be line item. And then obviously the funds go to the QI as well. So you'll get as a seller, you get the full settlement statement. You'll know exactly how much money is coming to your QI account. And then that'll be reconciled with your bank account, with your QI, whether you use us.
And let me ask you this, just one more question. And this is kind of a little bit outside the scope of what you're doing with the exchange, but it still is in the wheelhouse of what you do for a living, the general industry. But what do you, in terms of the Texas, do you do a lot of work in Texas?
Tons of work in Texas.
Okay.
Yeah, I'm a member of the Texas Land Title Association, so I spend a lot of time here, and of course I have a lot of.
So right now, my opinion of Texas is acquire as much real estate in the state of Texas as you can. You know what I mean? What's your impression of the real estate investment climate in Texas looking into the future? And what are some other areas of the country that you would say, hey, if you're going to put some money in real estate and you want this value to grow, these are hot areas where we think it's a very good investment. What are your thoughts on that?
Well, I think where you see the population, where this migration is going,
Texas,
Florida,
Tennessee,
Alabama, Tennessee, Georgia,
the
Carolinas, particularly South Carolina. I think we're seeing a lot of migration to these areas. So I'm gung ho, and I live in Arizona. I work at Arizona. I'm gung ho on that.
Nevada.
I think Nevada's pretty good, although it's pretty reliant on
Las Vegas.
Tourism industry. Right. Where Texas has a lot. What's great about Texas is that's so much diversity in regards to the employment. Not only pouring into this a lot from California, but also the gas and oil stuff, and especially as gas prices. I mean, the oil prices are pretty nice.
Right. So would you agree with me that, hey, if you're in Texas, as much real estate as you can grab, building for the future, go ahead and grab it?
I would definitely agree with that. I would definitely agree with that. I think now more than we've been on probably since 22 when it started to calm down. We're on like a 4-year flat line, maybe even a little bit of depreciation. I mean, I don't know if it's going to get much better, especially as we see interest rates lower. There's typically an inverse relationship, and that's just my opinion. I don't, not a fact, but I think as we see them continue to drop, I think we'll.
But 2020 to 2022 was just nuts, right? In
insane.
Terms of
insane
forever. So kind of flattened out.
Including Texas.
Right. Makes sense.
Yeah, no, but I'm gung ho on Texas for sure. As far as it seems like there's a great migration here.
Yeah, absolutely. No, there is. Absolutely. And we see it a lot in this office, and it's wonderful for us here.
Your population growth. It just goes to the population growth and job growth. Like you have both of those. You have pretty good climate too.
Right.
Like it's just where people want to go.
Okay, so guys, again, this is Michael Velasco. His website is 1031exchangeable.com. I've called Michael before, just when I have questions about maybe one of my clients runs something by me about a 1031 exchange. So Michael makes himself very accessible is what I found. So reach out to him. You get on his website. It'll be all the different ways to contact him. And he was great for my wife and I to work with. That's why I asked him to come here. Because we had a really good experience with him. So I want to thank you.
Thank you, Brandon. Thanks for having me. And like Brandon said, feel free to reach out. Anything, there are so many nuances to this. It is riddled with nuance, just like the T&E world where Brandon is. It's riddled with nuance. And so just, get somebody that really knows what they're doing and can help answer a question and put together a plan.
Yes. What I tell people is in estate planning, don't assume anything. Come get the expert opinion. Right?
Yeah. It's funny you say that because some clients want to go, I'll send you the paperwork. I'm like, no. We need to talk for 20 minutes because I'm going to walk you through everything, every pothole along the way.
It may not be that simple.
And I don't want to call from your CPA next spring going, what in the world do you do?
Right.
And so we don't ever want those conversations.
Fair enough. Okay, guys, if you're looking at selling an investment property, rolling it into another property, please give Michael a call and see how he can help you out. And thanks for coming.
Yeah.
Okay.
Thanks. Bye, guys.
Take care.